Are you new to mutual funds? I need to say this. It is not every mutual funds that suits you as a low risk taker. Now, on this board, we have three categories of mutual funds. And I'm going to get into it, the one that is good for high risk takers, the one that is good for the medium risk takers, and the one that is good for low risk takers. Because I remember that someone had my partner teach on mutual funds on TikTok, and eventually the person just jumped into mutual funds. Unfortunately for him, it was the one that was not suitable for low risk takers, for beginners that he went to invest in, and eventually saw his investment started going down. Why? Because he went ahead to invest in equity mutual funds. So you need to understand your risk appetite before you could go into mutual funds. The number one category of mutual funds that we have is what we call the aggressive fund. The aggressive fund. When we say something is aggressive, it means it's applying force, which means the kind of people that invest in this are those who have the capacity to take risk. They are the category of people who have the capacity to take risk. For instance, they can invest 1 million naira. They are after high return, but they don't also mind the risk. They can still risk at least 50% of their investments, which means not necessarily lose it, but at least maybe it goes down today. We call it volatility. One thing about equity funds is that it's volatile. It depends on the performance of the markets. It depends on the performance of the capital markets, because equity fund, which has to be a type of aggressive funds, majorly invest in equity. When we say equity, I mean shares and stocks. And you know, one thing is that today it could be the bull run, tomorrow it could be a rally, and tomorrow and day after next it could be a bear market. I don't know whether you get what I'm saying. If you know you are not a high risk taker, you don't like taking risk, you prefer the safety of your capital is what is important to you, then it is better you leave aggressive funds for those who are risk takers, who are high risk takers. Another example, so when we say aggressive fund, it means you should not invest in equity funds. Whenever you want to invest in mutual fund, you will see the kind of funds it is. You will see the kind of funds that it is. So when you say equity funds, don't invest in it as a low risk taker or as a beginner. Start from the last one, which is the defensive funds. I'm coming there. So don't go for equity funds, don't go for specialized funds. Specialized fund is a type of mutual fund that invests in special projects, and the return depends on the performance of that project. For instance, they could decide to tow a particular road, that let's fix this road. So they put funds together from investors, they fix the road and they tow it. What if it does not return on time? What if it does not yield on time? The return on investment does not accrue on time, which means maybe you have to wait for a number of years, and that wasn't your plan in the initial stage. Even though the ROI could be high, but you also need to be careful. So that's for aggressive funds. So it is for high risk taker. Then we have the balanced funds. Balanced fund is for those who are medium risk takers. When we say medium, it means those who are moderate. They can't take too much risk, yet they can still take risk that is at least more than the low risk taker, more than an average person who is just starting out. A major attitude of a low risk taker is they don't want to lose their capital. Their capital is so important to them that nothing must touch it. Nothing must happen to it. Those are the kind of people you see, they love savings accounts. They love putting their money in savings accounts. So when you tell them to come and invest, be rest assured that the kind of investment you are telling them to come and do is the one that is safe and secure. They like seeing their money, that even though it's not producing children in terms of return, but nothing should happen to it. So that's one thing about low risk taker. So, but a moderate risk taker, a medium risk taker can still take a portion of risk. For instance, maybe a drawdown was 20%, 20-25%, which means their 1 million naira can still at least come down to 750,000 naira to 800,000 naira, maybe before moving back up. So such a person who is a moderate risk taker can go for balanced funds. Balanced fund is a type of mutual funds that invest in a combo. So they try to balance it. That's why it is called balanced fund. They invest a portion in securities or assets that are safe and secured. For instance, treasury bills, the likes of FGN savings bond, FGN bonds. They invest in those assets, those ones that are safe and secured. They now also come to the aggressive fund side, which is invest a portion of it in equities or specialized funds in special projects. So they balance the two. It could be 60-40, it could be 50-50, and that's why I usually tell people, make sure you check the fund fact sheet. It is called fund fact sheet. The fund fact sheet will give you an insight into what that fund is investing into. That is what we call fund fact sheets. So I hope you understand. I hope you get the point for balanced fund. They invest a portion in high risk investments and a portion in low risk investment. Always check the fund fact sheets in order to have an insight into what that fund is investing into. Then we'll have the last, which is really meant for low risk takers or beginners when you are just starting out in mutual funds. Now, defensive stocks are, they invest in safe and secured instruments, safe and secured investments. So number one, for instance, is money market fund. Money market fund, that's majorly short-term instrument. Invest in treasury bills, invest in FGN savings bond, invest in fixed deposits, and at times they do commercial paper. The next one is fixed income fund or bond fund. Fixed income fund. So if you see this kind of fund with your stockbroker, you can go with it. Fixed dollar fund also is meant for low risk taker. Then we have ethical funds. Ethical funds is also good because they invest in assets that are ethical. Then the last but not the least, ETFs also to an extent is safe because they invest in a basket of stocks, and those stocks are passively managed because it could be a basket of fund, maybe in the tech industry, it could be in the oil and gas, depending. So that's why you also need to check the fund fact sheets, because when they are doing this as well, they are careful. So even though ETFs is a topic on its own, but it's something you can still consider as a low risk taker. I hope with this you have gained one or two things about mutual fund, especially as a low risk taker or as a beginner. If you have any question, thoughts, or comments, you can drop it in the comment section below. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so you can be notified whenever we release a new video. So we meet in our next video. Stay blessed.